Business entities pays wages, salaries, rent, insurance premium, sales promotion charges, electricity charges, etc. A business cannot earn revenue without inputs and paying for the items mentioned just now. Expenses are the cost of use of things or services used, which are necessary for earning revenue for a business. Expenses are voluntarily paid for generating revenue for a business. It means the business on its own volition spends money as expenses in order to earn revenue. Hello friends, welcome to Hamsa Accounting. In this short video, the journal entries concerning expenses will be discussed. Transactions regarding expenses can be in the form of expenses paid, expenses due but not paid, that is outstanding expenses, and expenses paid in advance, also called as prepaid expenses. Treatment in the journal for these are different from one another. Let us discover how each one is dealt with in a journal. Expenses paid implies that an expense such as rent, salary, advertisement was incurred and the payment is settled or the payment has been made by the business. For example, rent for the month paid to the landlord. Here, rent is an expense and any increase in expense is debited in the journal. Since the payment is made, therefore cash balance with the business has decreased. Cash is an asset and any decrease in asset is credited in the journal. In transaction 1, rent for rupees 24,000 paid to the landlord on 24/7/2022 by check. So let us see how the journal entry is made for this example. Just using the reasoning discussed in the previous slide, rent account will be debited for this transaction because rent is an expense and any expense is debited in the books. And since the payment is made through check, bank account should be credited because payment has reduced the bank balance for the business. Sometimes a business may have not made the payment for an expense when it was due, but it might have promised to pay at some future date. For example, the business has not cleared the payment of rent for the previous month. In this case, the business has enjoyed the accommodation for the previous month and the time period has also passed. Hence, the expense did take place but the payment was not made. Because the payment was not made, it became a liability for the business. The amount for rent will have to be settled in some future date. So, rent as an expense did arise, even if the payment was not made. Rent is an expense and increase in expense is debited. On the other hand, promise to pay the rent at some future date has increased the liability of the business and any increase in liability should be credited. So, in this example, where rent of rupees 45,000 which is due but not paid yet is journalized as rent account debit to outstanding rent account. The reasoning discussed in the previous slide is applied in this example. In another set of situation, a business entity may decide to pay for certain expenses before the due date or before they are needed to be paid for. This is regarded as payment for expenses made in advance or prepaid expenses. For example, rent for the next year paid in this year. Since the next year is yet to arrive, therefore the business has not enjoyed the accommodation for which the rent is paid. Although payment has been made, this cannot be classified as a payment for expense at the moment. It can be regarded as an expense only when the time period for which the payment has been made is over. For the moment, it is an asset because future benefit can be derived from this payment. As asset in the form of advance payment has increased, it will be debited in the journal. As for the credit side, money paid reduces cash balance and decrease in cash, which is an asset, is credited. Let us consider an example. Transaction 3. On 1st January 2019, rent for the entire year paid in advance for Rs 3,60,000. Here, rent in advance is a prepaid expense because at the time of recording this transaction in a journal, that is on 1st January 2019, the payment was made for the entire year. So on 1st January 2019, this payment will be regarded as an asset. Prepaid expense is an asset as discussed in the previous slide, and increase in asset is debited. So we have debited prepaid rent account in this journal. Bank account is credited because payment of money decrease the bank balance, which is an asset, and any decrease in asset is credited in the books of accounts. A point that one must keep in mind is that when the time period is over, the asset becomes an expense or the asset transforms into an expense. So when the first month, that is January 2019, is over, a part of the asset in the form of prepaid expenses or prepaid rent, which in reality is an asset, becomes an expense. So on 31st January 2019, the rent for the month of January becomes expense. We know that any increase in expense is debited, therefore the rent for the month of January only is debited. Out of the total rent of 3,60,000 for the entire year, the rent for the month of January only, that is Rs 30,000, out of 3,60,000 is debited as an expense. Therefore, rent amount of only 30,000 is debited. Let us now focus on the credit side. A part of the prepaid rent, which was an asset, gets converted into expense. This reduces the amount of asset in the form of prepaid expense to the extent of the rent for the month of January. So, asset in the form of prepaid rent gets reduced to that extent. Any reduction in asset is credited in the journal. Therefore, we have credited prepaid rent for this transaction. Hope the things are clear regarding treatment of expenses in the books of accounts. Thanks for watching. Please like and subscribe.